Happy Thursday to you from the floor of the CME here in Chicago. I'm Oliver Sloup with iiTRADER and your grain market update. We are seeing some additional premium come into the market, specifically the corn and soybeans, which is very nice to see and kind of expected. Going into a longer weekend in this season, you get that weather premium of uncertainty coming in, and that's certainly helping support prices. I want to take a look at some of the key technical levels we're looking at for that May corn contract. 369.5 is going to be the big line in the sand. The bulls want to get a conviction close above. This represents the 50-day moving average. We have not closed above the 50-day moving average since March 8th, so this is going to be technically significant for us. If we do, I think we could see some additional buying to start next week's trade and send us on a continuous trend of higher highs and higher lows going forward. Now, as far as the soybeans are concerned, I think a little bit different of a story. I think this is mostly a dead cat bounce, but I think there could be some more upside potential here towards the 970 level for that May contract. That's going to be a big level to keep an eye on. I think the bulls do have a silver lining in this price action, though. If you recall, earlier in the week we had a bearish USDA report, but the bears were not able to press prices any lower, and we actually rallied towards the end of the day, and we've seen that buying continue. So the fact that the market couldn't drift lower on a bearish report, I think ultimately is bullish over the very, very near term. If we fail to get out above 970, I wouldn't be surprised to see funds step back in and press us back down towards the low end of the range, which comes in between 935 and 937. Now, lastly, as far as the wheat's concerned, really kind of disappointing price action today as we round out the week. I would have expected it to get a little bit more momentum with the corn and soybeans, but really failing out above technical resistance. And I think this failure to break out is really going to invite the sellers back in. Presses towards the bottom end of the range. 426 to 427 is kind of what we're looking at for first support. A break below that, and I wouldn't be surprised to see 415 in the near future. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with iiTRADER from the floor of the CME.